Hi, I am Anna. I come from www.ntvforex.com. Vaccine hopes are contributing to the risk-off mood. http ntvforex.com News ID 75829D 7/20/2021 32:27 p.m. Outlook. The calendar is light this week, with the European summit continuing this afternoon in Brussels. The mere fact of expanding the summit into a marathon is promising and may imply a second or third summit will not be needed, as Merkel had suggested. Believe the bond market. As the FT reported, the Italian 10-year bond yield fell to a 4-month low of 1.12%, with declines in Greek, Spanish, and Portuguese yields, too. This is what is likely behind the less negative bond yield. In the US, a bad event is forming, although as it gets built in, may not have too negative an effect on financial markets, despite its inherent danger. That's the Senate hearing tomorrow on confirming fruitcake Judy Shelton to the Fed board. The WSJ reports the majority Republicans are giving up their opposition, which means permitting politicization of the Fed. One possible Republican holdout is Louisiana's Kennedy, who is charmingly weird and hides his brain under a tricky Southern mode of speaking. Shelton has flip-flopped on just about everything, but in the past announced she favors a return to the gold standard, disbanding the Fed, and other kooky ideas. She wrote a book on the dollar that curled our hair. Also up for a vote is former research director at the St. Louis Fed, Mr. Waller, probably the most qualified guy ever nominated. What a contrast! Shelton can be easily outvoted but can waste a lot of the board's time. The real problem is, as the WSJ reports, Ms. Shelton faces enhanced scrutiny given widespread speculation that Mr. Trump may try to promote her to Fed chair when Jerome H. Powell's term expires in early 2022. Political pundits say the lasting legacy of any president is appointments to the judicial bench, and we are all praying for the Supreme Court's Ruth Bader Ginsburg to make it to January 20, but the Fed must come second. Because it's a short schedule of releases this week, we can pay attention to things that normally pass by without comment. Gittler at BD Swiss points out that the U.S. Treasury may be eyeing Switzerland as a currency manipulator in the upcoming biennial report because the Swiss National Bank feels it has no alternative to intervention because it sees the current interest rates as the absolute seller. 2 points. The Treasury has allowed itself to be managed by political considerations in the past, which is why China got away with manipulation for so many years. The State Department was working behind the scenes. The implication is that if the White House wants to name Switzerland this time, that's what the Treasury will do. But, point number 2, Switzerland doesn't give a fig if the US names it. Switzerland has no respect for Trump or for any sanctions the US might want to impose on the tiny amount of US-Swiss trade. Somebody will probably tell the Treasury it will look weak and powerless if it tries to strong-arm Switzerland, and the only response is a jeer. Also on the agenda is the return from holiday of the Congress, which is gearing up for an epic fight over the second recovery spending bill. The House already passed a giant bill several weeks ago, and it has been languishing in the Senate ever since. The House bill is for $3.5 billion and the Senate is thought to have its eye on a mere $1 billion. The important takeaway is that we will get something. The stock market will be happy to get anything. That puts off an equity pullback that might favor the dollar. Also contributing to the current risk-off mood will be news about vaccines. We are supposed to get the Oxford results today, the biggest and most advanced of the trials. Meanwhile, the UK announced it is locking down orders for 90 million vaccine doses from a slew of producers, including the US's Pfizer. So far there are 140 possible vaccines, of which 23 are in clinical testing. As we have seen a couple of times, the stock market loves the idea of a vaccine. Bottom line, there are risks that could balloon into the need for a safe haven, especially a failure of the EU summit, but on the whole, it looks like the slow summer week is getting off to a weaker dollar start. Tidbit 1. The 538.com newsletter writes, yesterday the race between President Trump and Joe Biden is verging on a landslide. That's not a word we use lightly. Over the past month, Biden's lead over Trump has been both incredibly stable and unusually large. Amidst Trump's unpopular handling of the protests that followed the police killing of George Floyd, Biden's lead has hovered within a tight band of 8.9 to 9.6 percentage points since mid-June, according to 538's national polling average. The Economist model is also rosy, giving Biden a 93% chance of winning the electoral vote. We are all wary of polls and models after the 2016 experience. One of Trump's lackeys was on a Sunday TV talk show pointing out that Trump can still make it to re-election if some swing states swing his way at the last minute. On the liberal side, analysts still wonder if Biden's choice of VP will tip the scales. Well, of course it does. Biden committed to a female VP but not necessarily a black one, despite a good field of candidates. We still prefer stalwart, smart Stacey Abrams over the whiny, self-righteous Harris. Tidbit 2: One of Trump's many failures can be seen in China's decision to seize this moment, during Trump's presidency, to grab Hong Kong for good. China has had many possible moments, but this one was engineered to coincide with a weak, ignorant, and pliant American leader who has no idea how he is being manipulated. China bet on Trump backing down from any real defense of the civil rights protesters, and so he did. As an additional reward, Trump gave approval of concentration camps for that pesky minority, the Uyghurs. Besides, they are Muslim. This insight arises from gulping down a new book by Jonathan Kaufman, The Last Kings of Shanghai Viking, 2020, about two Jewish families from Baghdad who emigrated to India and China in the 19th century and came to dominate industry and finance in China, including the founding of the Hong Kong and Shanghai Bank. This book is noteworthy for clarifying at least some of the confusing aspects of the history of Hong Kong, although you could spend 10 lifetimes and never grasp all of it. The author does not mention the civil rights protests or Trump, so this is our own deduction. The author does have a firm grip on the communist Chinese mindset, which continues to feature at or near the top a still burning hatred of having been humiliated and insulted by the British under the colonial boot. Hong Kong is the last vestige of that. We might think the US is secondary in this saga because, after all, the treaty is made between China and the UK. But it's the US that rules the Pacific waves and is the most likely sparring partner in the South China Sea, if it comes to that. Trump is the classic cowardly bully and doesn't even rattle the saber. This is not to say a different president would not also back down on Hong Kong as political expediency, but a different president would at least get some behind-the-scenes cooperation with the UK and the rest of Europe on some matters, even if only on trade. Trump famously sees no US advantage in joining up with other countries, although Defense Secretary Pompeo touring Europe this week is a wild card. This is an excerpt from the Rockefeller Morning Briefing, which is far larger, about 10 pages. The briefing has been published every day for over 25 years and represents experienced analysis and insight. The report offers deep background and is not intended to guide FX trading. Rockefeller produces other reports in spot and futures for trading purposes. To get a 2-week trial of the full reports plus trader's advice for only $3.95. Click here. Subscribe our channel to receive the news as soon as possible. Thank you for watching.